The FOMC is this week, and we could be nearing an emergency rate cut. Today, we'll break it down for you and find out if that's going to happen. My name is Paul Bear. Welcome back into Tech Path. Let's get into it today. I do want to thank our sponsor. That's iTrust Capital. This is a place where you guys can get your own crypto IRA started, and they give you a page on how to get started. And there's a couple of things you can do. I'll kind of zoom in on that. You can do a simple setup. You can go in and fund it, or you can do some buying and selling. And of course, all of this is available there on their educational page when you go into the how it works. So the cool thing is we're nearing the April 15th deadline. Did you know that you guys can still take advantage of a crypto IRA for last year on last year's taxes? So check it out. Make sure it works for you. Always seek tax advice on all that good stuff, but use our link down below. It's going to give you a $100 funding reward to get started. Let's go into a couple of things I want to lead off with here. Sunday night update. This is the futures are red across the board despite no tariff headlines, even though there's a looming tariff headline coming. And it's officially Fed Interest Week, which we will be doing a live stream for you guys today or this week. It's going to be on Wednesday, and we usually do it around mid-afternoon. So typically it's around 2:30 when Chair Powell will go in and do his remarks, and that's typically what we will put on for the live stream. So make sure and tune in on that. If you're not subscribed to the channel right now, do that and hit that little bell. It'll give you a notification when we go live, and those are usually big announcements. And if you're looking at trading the market, there could be some things there that will be revealed. The key things to watch here on this week, of course, is whether or not we get the interest rate decision. Right now, everybody's saying we're going to hold rates. However, the pressure is on, and I'll show you some stuff here in a second in the show today that may make you think that maybe an emergency rate cut might be in order. And the Fed dot plot is the other one. Possibly the bullish side of it could be 3 cuts. So if we get any indication that a 3 cut could happen, that would be bullish, even if we had a flat, no rate change on this meeting. And then, of course, if he hints at stopping QT, and when you look at quantitative tightening in general, the idea is the pressure that it puts on businesses in the United States that slows down the economy, which also slows down jobs. That's the thing that we're dealing with. The risk that you have is when you have falling inflation but rising unemployment. That's called stagflation, and that's the thing that he is trying to do a tightrope on right now, for sure. Other things that you got to look at is where leaders of businesses fall. And let me kind of explain this, because right now there's a lot of warnings out there. Okay, some percolated from airlines, retailers, Dollar General, Walmart, about underwhelming consumer demand. And this is the concern that I think Trump will address very quickly. One of the biggest sectors out there that Trump will pay attention to is the restaurant industry. Tariffs will have and are having a massive impact on the restaurant industry. I talk with them all the time, and I was talking with a couple of associations just last week. The amount of turmoil that it has caused at a lot of the state level associations is pretty significant, and at the national level, it's likely that we could see some lobby power starting to put some pressure on President Trump to get going, because nobody's predicting this, but we could see emergency rate cuts maybe before the May meeting, and I think that's what everybody's looking at right now. So a couple of things to look at here. Whether or not we get the number of rate cuts, the key here is going to be what is going to trigger them. Well, remember that COVID-19, the pandemic, that's really the one that triggered emergency rate cuts that we saw, which was just radical in comparison. We saw 100 basis points, almost 1.5 points that fell off. Market was trying to get stimulated. We saw that kind of impact. If you look at some of the charts right now, because this is what's happening today, I'll kind of zoom in on this for you. U.S. stocks now have gone 17 days without consecutive gains, and this is the second largest stretch since COVID. And you'll notice that the visual through Wednesday, when it was 15 days, we're continuing to see this downward trend on gains. And if this continues to hold, this is going to put, again, more pressure on President Trump. And so far, he's been talking about holding the line on these rate cuts. Stagflation, though, is at risk now. So this potentially could happen if we see a slowing economy, which obviously will affect inflation very quickly. But that slowing economy will also affect these job numbers. And that's the concern. That's probably the, kind of the death cross for what could happen with the Federal Reserve, which could put them in a tricky spot. And I agree with this one. If you look at just truflation, a little bit of a spike. This is a concern that we see right now. Of course, right now, the Fed decision, if you look at Polymarket on March 19th, it looks like it's going to be a no change rate. But the key here is whether or not Powell gets a last minute push from market indicators coming in. So I want to go to a couple of clips here. This first clip is going to get into Trump's position on tariffs currently. Take a look.
Any chances that you will ban on the tariffs April 2nd?
No.
You are not going to change your mind?
No, look, no, I'm not going to bend at all. We're not going to bend. And to be honest with you, Canada only works as a state. It doesn't. We don't need anything they have. There's not a thing that we need. Now, there'll be a little disruption, but it won't be very long.
All right, so you can see Trump is definitely holding the line right here. Now, could that be a poker face? Many people think that this could end before April 2nd, which is the deadline when all these reciprocal tariffs will go into effect, and Trump stating that he's not going to move on this. CNBC, Joe Scarborough has some interesting remarks on this. Take a look.
I'm going to tell you how to do it. Do you want to know the proper way to do it? Are you open to suggestions?
From you always, I think the president has a pretty good idea what he's going to do. Go for it, Joe.
If we can determine that it's going to be counterproductive to some of our great companies here based on something that's not related at all, then don't do it. Do all the reciprocal stuff, because here's a chart.
Yeah, look at that.
On the light blue are things that basically accomplish the same thing but aren't de facto tariffs.
You know, we've got a hard deadline that's coming up that's going to, I think, be great news for markets. The amount of tariff revenue that we've already collected adds up to about $1 trillion over 10 years. $1 trillion that we could use to, say, give everybody a tax cut or reduce the deficit. When people are naysayers and get all upset about, oh, market this, market that, tax hikes, plan is to use the tariff revenue to balance the budget
like a tax,
and to reduce taxes.
That's from us. That's okay.
Kevin, this is a really important point. I don't know if you just heard, Ed Yardeni was with us.
Oh, sure.
He's actually
Old
taking
friend Ed,
his, but if the administration is looking at this as a way of raising revenue, as you just laid out, to replace personal and corporate taxes, he said that he does not agree with at all. And that's going to be something for not just the markets, but for businesses to try and contend with.
Right. President Trump is very flexible. He said that over and over. And the countries that don't are going to have to pay the tariffs, right? That's the way it is.
Bringing a lot of the manufacturing back here, that won't be back for years.
You know, I thought that too, Joe, but then I was fiddling with the data as we're getting ready to meet with the president and the vice president last week.
The market seems to go up on days when, you know, we haven't heard new utterances about tariffs.
I think there should be clarity, absolute clarity. The president is clear that we're going to have reciprocal.
Getting it now?
All right, so you can kind of see CNBC is a little bit on edge there. I think a lot of people, and you have to remember, guys, this has been and will have the most impact on really the wealthiest Americans. You know, if you look at the amount of the market contraction that we've seen, and it's likely if he does hold through to these tariffs that we will see more pain. If we continue to see that, I mean, we could see trillions continue to come off of the market cap of the S&P 500, and that in itself will continue to put some pressure, I think, on the wealthiest Americans out there. The real question is how does Trump spin this to his base as a positive thing, and how does Trump hold the line here and still keep corporate America in check? Because that is going to be a factor playing on to this. Now, Tom Lee said, hey, we think this resolution might happen. Here's what he had to say.
But history says that markets will recover, right?
Yes, they've recovered every time. One thing we have to keep in mind is when markets fall this quickly from a 52-week high, I mean, just remember, less than a month ago, we were at all-time highs. That is a market pricing in a crisis. You know, I'd say we're almost 50% pricing in a recession, and we're assuming there's no Fed put. Now, the Fed is in a position to cut rates. That really should mitigate the downside. And I do think two other things that investors have to keep in mind, because many people just want to get out until April 2nd, is number one, I do think there's a very high probability that a tariff solution happens before the next 3 weeks happens. And it's simple to see because China, Europe, Canada, Mexico, since April 18th, all of those countries have outperformed the U.S. I don't think that markets are that blind to say if Canada and Mexico are about to have a recession, they should outperform the US. And I think the second thing people should keep in mind is that when you have a global crisis brewing, and we highlighted like the 1962 Cuban Missile Crisis, that was a 12-day crisis, but the markets bottomed 7 days into the crisis. 5 days before that crisis ended, the market was already recovered 2/3 of the losses.
All right, so there's a couple of things you have to look at right now. And first of all, I would say that Tom Lee might be talking his book a little bit. He was talking about, as a lot of people are looking at, a strategy of exiting the market through the April 2nd decision. That would affect him because obviously the amount of holdings that they have assets under management. But in addition, you look at just the situation currently with Trump. He has been a tariff guy through and through. He did it before in his previous administration. I think he's going to hold the line here, and I think he's going to implement, and it's right now, a game of chicken. And I think that Trump is going to do it. If he does it, expect to see some immediate market, I think, pain that we will see migrate its way into crypto. The question is how long will that happen? Because when he does spin or have some sort of influence saying, yeah, I think I'm going to come out of this, or we got what we wanted, the negotiation is good now, that's when you're going to see this happen, and that is the U.S. money supply. Money supply is accelerating, and back to Tom Lee's point right here, this is the 11th straight month of money supply expansion. So this is the amount of dollars in circulation that's reached 21.6 trillion, and just 16 billion below its all-time, which was in April 2022. And that, we all know what that was. Everybody was hoarding cash, concerned about what was happening. That's the last time. So this acceleration, this is when you see markets in high growth sector. This, of course, right there is a good example. And this goes all the way back to December of 22-ish, where we started to see that market, and then June of 23, the least amount of supply out there. So M2 right now, starting to hit that increase. Could we be in this area here, or is this going to be a small retrace and back into a growth market? I think that's the biggest investor question that everybody's asking today. Other things you got to look at right now, the market's biggest risk in 2025 right now is recession. And this thing they call the circular crypto economy. And let me kind of explain this. They hit a couple of good points here. If you look at DeFi, for example, point of finance is to finance something, right? But if you only thing that DeFi finances is more DeFi, then that would be circular. This is coming from Brightman. And further in the article, they say, well, this is stark contrast to stock market, which is built on revenue generation. That's why we see all these performance numbers, making crypto industry's lack of grounding one of the main industry threats. This again gets back into the scenario that we could face here in crypto, where they're not producing anything of value in consideration. But profits, I would say, are in place because most of these chains are making money. So that, of course, increases the value of these tokens. Then you look at some of the moves that Wall Street are making, and this, of course, is Cathie Wood. 21 shares is going to be shutting down Bitcoin and Ethereum futures ETFs. So this is a big factor. Okay, maybe they're throwing in the towel. IBIT has won. That's BlackRock. I get that. But if you start to look at some of the moves right here that Cathie is making, this, of course, is the combined holdings of ARK's, all of ARK's ETFs, and their Bitcoin holding company, which, of course, has recently started to slide. So we've started to see a little bit of a sell-off here when it comes to Bitcoin for Cathie Wood. Then if you look over here, what's happening with something like a Robinhood stock, this is where they're starting to really double down on this. Now, there's many reasons why we think Robinhood is going to be another, company that's in the right place at the right time when this market takes off, because when it does, it's going to open up an opportunity maybe for a lot more investors, retail investors, to come in, and that's going to be the place they'll do it. Here's Kobe Easy talking about this. Robinhood stock obviously saw a little bit of a jump right there. You saw it, 5% after announcing its new prediction markets hub with Kalshi. So prediction markets coming to Robinhood. This is all beneficial. Robinhood doing a lot of other things out there. One of the biggest ones is this 2% account bonus transfer. This is 2% on no limit transfers from other, exchanges and other brokerage accounts. So this is a pretty big deal if you start to see this playing in, because this is where Robinhood is really trying to gain a lot of gold users. That's their premium account, which I think is $5 a month. there's some benefits to it, but that's their leverage of being able to say, this is how we're growing. Gold account users. Much like, if you look at Netflix trying to gain subscribers. Well, that's what Robinhood is going after, so they can market to that. And then, of course, you look at some other factors, because she hasn't, being Cathie Wood, hasn't really repositioned any of your stock holdings when it comes to Tesla. However, she is also going in on an alternative company, which is called BYD. BYD is a Chinese car manufacturer, electric car manufacturer. They do a lot of other things, including a lot of autonomous vehicles. And this position is starting to grow. So now it's number 18 in ARQ, which is kind of their innovation fund. So just interesting moves, considering the Chinese aren't putting those cars in the U.S. yet. Or maybe is there something that could be brewing that could be coming for that? Again, that would kind of change Trump's, I think, relationship with Elon if something like that were happening, because I would say BYD is one of the biggest competitors in China for Tesla overall. The other thing that starts to shake you a little bit is this right here. Standard Chartered revisited their year-end 2025 price target for ETH. Guys, they went from 10,000 to 4,000. So first is, how were you that wrong? And if you were that wrong then, is Standard Chartered even wrong now? That's a question mark. Everybody's asking about ETH because of ETH's slowness in the market and has continued to hold. Now, granted, sure, ETH has kind of been hovering around that 1,800 to 2,000 range, but it is definitely not the token that it was in the previous bull run. Michael Saylor's strategy also has started to slow down. He made his smallest Bitcoin purchase ever on record. Many people look to this and say, okay, maybe this is the alternative where we do see so much pressure on the economy and on what's happening right now due to these tariffs and potential issues, that could we see the rate cut actually occur. Wednesday is going to be a big day, so make sure and tune in for that, guys. You do not want to miss it. If you're not subscribed, do it now and get in on that little bell right there, because that will give you the notification when we go live on Wednesday. We'll do that live stream for you, and I'll give you my analysis after that. Make sure and jump into our Diamond Circle, and if you want to talk with me directly, you can do so in our Telegram group. Only one, and it's the one down below. Click it. It'll take you over there. Follow me out there on X at Paul Barron. We'll catch you next time right here on TechPath.